Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. The government planning a slew of measures to bring prices down, looking at tempering inflation before assembly elections. Business Today TV gets you the inside track on what's being planned. There's more trouble in China. One of the country's largest developers, Evergrande, filed for bankruptcy in the US, even as two housing giants default on debt servicing. Moody's reaffirms India's sovereign rating, says growth to outpace other G20 economies for at least 2 years, adds that potential growth limited only by inability to boost manufacturing and jobs. IT stocks tank as global indicators turn red. Real estate problems in China keep investors on the edge. Sensex and Nifty shed around 0.3% despite all Adani Group stocks surging and Reliance rising 0.5%. RBI brings relief to millions of borrowers, directs banks to bring in more transparency in floating rate loans, customers to be informed of all changes and to be given an option of shifting to fixed rate regime. The Modi government is preparing to deploy some big guns against the sudden surge in prices. While there are no specific details available yet of the measures which are likely to be announced in the next few weeks, Business Today TV's Karishma Sudani has an inside track into the action on Resina Hill. Here's a report.
It was this Monday that the shocker came. Government data that a huge rise in vegetable and food prices had pushed inflation to a 15-month high in July. The 7.44% figure is the highest since April last year and well out of the RBI comfort range of 6%. Importantly, the price rise is also well beyond the comfort range of most Indians. The alarm bells were loud enough to sound in the Prime Minister's Independence Day speech a day later.
महंगाई को नियंत्रित रखने के लिए भरसक प्रयास किए। पिछले कालखंड की तुलना में हमें कुछ सफलता भी मिली है, लेकिन इतने से संतोष नहीं मान सकते। दुनिया से हमारी स्थिति अच्छी है, इतने बात से हम सोच नहीं सकते। मुझे तो मेरे देशवासियों को महंगाई की बोझ कम से कम हो, इस दिशा में और भी कदम उठाने हैं और हम उस कदम को उठा के रहेंगे।
Highly placed finance ministry sources have told Business Today TV that the centre may soon unveil some measures with an eye on easing the impact of inflation on consumers. While the government believes that the recent surge in inflation is linked to seasonal variations and temporary disruptions in supply, the upcoming state assembly and next year's general election may necessitate a response to cool prices. Among the measures aimed at protecting the most vulnerable people in society is a possible extension of free food grain scheme under the National Food Security Act. In addition, the existing subsidy support for cooking gas under the Ujjwala scheme will continue. The government may also reduce import duty on wheat. There are also reports that the government may requisition some funds from various ministries to fund these moves, ensuring no additional burden is put on the exchequer.
Well, in order to control inflation, the government is, of course, trying to soften the blow and cushion the consumers with certain measures and cuts. The prominent one being a cut of tax on petrol and diesel. And besides that, the government is also exploring options to cut import duty on wheat and other food grains.
There are also steps under consideration to prevent hoarding to sensitive food products. The Finance Ministry may approach the Reserve Bank of India seeking restrictions on loans and advances given to traders of sensitive commodities including food grains, cereals, pulses, oilseeds, raw cotton and sugar among others. The objective in imposing credit controls would be to curb the use of bank credit for speculative holding of essential commodities and avoid the resultant rise in prices. Banks are required to segregate each commodity covered by such controls and fix the credit limits against each.
Well, the Reserve Bank of India and the central government is confident of the fact that the current inflation numbers and in fact the 7% high retail numbers have been only because of the seasonal changes in terms of the prices of vegetables and certain food products. While they are transient in nature, sources in the finance ministry have told us that they'll be cautious of any further increase in inflation if it continues to be for more than 3 months. In fact, we have also been told that the government will look at certain policy measures and intensify measures in case they are needed in order to soften the blow and cushion the middle class consumer of India. Karishma Astani reporting for Business Today Television.
China's property giant Evergrande has filed for bankruptcy in a U.S. court. The developer was the largest in China till 3 years ago and now is the world's most indebted property developer. The filing seeks protection from overseas holders of $19 billion in bonds as the company restructures its debts. The latest move by Evergrande adds to the deep pain in China's once booming property market.
In yet another sure sign of the deepening real estate crisis in China, property giant Evergrande has filed for bankruptcy in the US. The move will allow the heavily indebted company to protect its assets in the US. The company has sought protection under Chapter 15 of the US Bankruptcy Code, which shields non-US companies that are undergoing restructurings from creditors that hope to sue them or tie up assets in the United States. Evergrande defaulted on its huge debts in 2021, which sent shockwaves through global financial markets. It basically ran out of cash and failed to pay its contractors and suppliers. It is the world's most indebted property developers with more than $300 billion in liabilities. The company's offshore debt restructuring involves a total of $31.7 billion, which include bonds, collaterals, and repurchase obligations. Negotiations with offshore creditors have been dragging on for more than 18 months, without any solution in sight. While Evergrande's default 2 years ago set off initial concerns about China's property sector, signs of a second wave of distress are emerging. Recent economic data reflects deepening anxiety with some of the biggest companies in China's real estate market struggling to find the money to complete developments. China's largest surviving property developer, Country Garden Holdings, defaulted on its debt payments last week. The company has 3,121 projects across the country. Zongrong International, a major Chinese trust firm with substantial real estate exposure, has also missed some repayment obligations, highlighting the outsized exposure of China's $3 trillion shadow banking sector to the real estate industry. For the buyer, who has made payments and has the burden of a home loan, there is little chance of getting possession of a house with Chinese developers, leaving a string of unfinished homes, shattering investor confidence in a blow to the world's second largest economy. Earlier this month, China said its economy had slipped into deflation, with consumer prices declining in July for the first time in more than 2 years. The country's imports and exports also fell sharply last month, with exports down nearly 15% versus a year ago. Morgan Stanley cut China's growth to 4.7% this year from the earlier 5%. JP Morgan has pegged the figure at 4.8%, while Barclays has trimmed it to 4.5%. Earlier this week, China's central bank unexpectedly cut key interest rates for the second time in 3 months, in a bid to boost the economy. China's housing sector contributes nearly 30% to the country's GDP, and a crisis in the sector has fanned risk of financial contagion, which could have a destabilizing impact on an economy already weakened by tepid domestic consumption, faltering factory activity, rising unemployment, and weak overseas demand. Bureau Report, Business Today Television.
The big question everyone is asking is, will the trouble in China cast a long shadow on India? Should the Dalal Street investors be worried? My colleague Sakshi Batra got some answers from market analyst Abhishek Basumalik. Let's listen in.
Why is the land market so central to China? And how big could this property crisis really get? And what could be the impact on India, if at all?
See, there will probably not be any direct impact on India, but for the Chinese domestic economy, land and real estate has been one of the greatest sources of savings for the common people, right? So if you look at, how Chinese people actually save money, the most predominant savings is through real estate. And right now, the situation is that real estate prices are falling.
So, Basumalik, could this also have an impact on the way the flows also come in from foreign investors, since China is going through this economic meltdown and foreign investors just started to put in money in the Indian markets after a long haul? Will this mean added advantage for India at all?
It is definitely an advantage because large global investors are, if you look at the emerging markets basket, there was only, in terms of the larger economies, you have India, you have South Korea, you have, China was there. So if you look at now, what is happening is, China is increasingly getting lower and lower inflows. And that is going to, part of it is going to come down to India.
Average Indian investor, how does one read through these developments in China then? For a person who has a large part of investment in the equity markets in India, in the debt market, in the property market in India, and some part of the investments, say, across the world through mutual funds as well. What does that average investor really do?
See, from an average investor perspective, I think for the next maybe week, 2 weeks, we need to be a little bit more cautious. We want to see how this plays out. But other than that, I don't think there is any major impact that is going to come to India from whatever is happening in China. That at a bottom line level, I don't think an average investor in India needs to worry about what's happening in China beyond, let's say, the initial knee-jerk reaction that might happen.
Equity markets ended the week on a dismal note, with benchmarks settling lower for another session on the back of muted global cues, renewed fears of an interest rate hike in the US, and concerns over the health of the Chinese economy dented sentiment. A weakening rupee also cast a shadow on the market today. Sensex was down 200 points, Nifty over 50-odd points today. On the upside, Adani Enterprises and Ports continue to stand out. Eicher Motors, Maruti, Britannia making up the gainers list today. Top laggards, however, Hero MotoCorp, Tech Mahindra, TCS, Hindalco and Infosys. The tech and auto really spoiling the mood. The Reserve Bank of India has issued fresh guidelines for banks issuing loans on floating interest rates. In an order which will bring relief to millions of loan customers, banks have been asked to keep customers informed of every change made to their loan conditions. Banks will have to clearly communicate to the borrowers about the change in EMI or loan tenure. Banks will also have to provide the borrower with an option to switch over to fixed rate as per their board policy. Banks have been asked to ensure that an increase in tenure doesn't lead to any negative amortization. Banks have till the end of this calendar year to ensure that the new rules are in place. Here's what else is making news in the corporate world. Reliance Industries rallied by almost 2% after the announcement that Jio Financial will be listed on the 21st of August. For 10 trading sessions, a stock will be included in the Trade for Trade segment. Reliance shareholders have already received Jio Financial stocks in their accounts. Currently, Jio is trading under a dummy ticker symbol following the price discovery at 261 rupees. The Adani Group's market capitalization has reached 11 lakh crores for the first time since February, with all of its listed entities rallying by up to 12% in trade. The surge comes amid rumours that the company is in talks with Abu Dhabi National Energy for investment in Adani's thermal transmission, clean energy and green hydrogen sectors. However, the Adani Group has issued a clarification notice stating that the rumours are false and that there are no investment plans with them. Concord Biotech made a robust debut, opening at a premium of 21% at 900 rupees, compared to its issue price of 747 rupees. By the end of trading, the stock had risen to 27%, that's to 943 rupees. The Rakesh Jhunjhunwala-backed company raised 1,551 crores through its IPO, which garnered significant investor interest over the three-day bidding. It was subscribed 24.7 times, with retail investors subscribing 3.78 times. Yesterday, we brought you a small chunk of the debate on new guidelines by the National Medical Commission asking doctors to prescribe only generic medicine. This move has been met with a backlash by both doctors and the pharma industry, united in opposing the move. Today, BTTV Managing Editor Siddharth Zarabi spoke to a panel of experts on the findings of a survey conducted on the issue to find out what consumers want.
What would you want your doctor to prescribe for your ailment? And this is the crux of today's debate and the debate that we've been having earlier. And the responses are varied. You can see 60% of the responses saying a branded drug along with the name of the salt in case the patient wants to opt for generics, followed by name of the salt and as an example the name of a branded drug. Sachin, if you are back with us, I want you to explain this particular set of responses for our viewers.
Absolutely. So this has been another, major subject of discussion since the NMC guidelines came, Siddharth. And this is where, when we asked people, what is it that they want to see on the prescription, a whopping 60% people basically said that, look, I want to benefit from the doctor's experience and their knowledge with different medicines and their diagnosis, of course. And therefore, I want the doctor to write the name of the branded medicine that they recommend, as well as the name of the salt. So that way, if it is something that I cannot find, I have an alternate that I can, get in my area or from my chemist. Also, if I cannot afford, the branded medicine, because let's say it's expensive, and beyond my budget, then I can go and seek an alternate medicine.
Dr. Jayadevan, what do these numbers tell you? People want to exercise their choice, free will really. They want to know the best, and they also want to know the base drug, the salt that is composed of in what the doctor is recommending.
Okay, our viewers might not necessarily fully understand the word generic and branded. It's quite possible without a healthcare background, you might have a vague idea, but actually they may not understand. So that might have influenced the survey. But let me give you, to make this absolutely clear, let me present a very simple hypothetical example. Let's say we go to a shop. I go to a shop to buy toothpaste, and I use Colgate. It's just my choice. Or let's say I use Closer, common brand. I go to the shopkeeper and say, I want Colgate toothpaste. The shopkeeper says, no, you can't have it. Then he gives you a blank white tube of toothpaste and says, you can have this. And I go, excuse me, I wanted Colgate, not a white tube of paste. He said, no. According to the new law, I decide what toothpaste you will take, not you. And this is the predicament that the doctors are facing now.
It's very clear that the ideal set of sort of directives have been framed, and perhaps the underlying assumption has to do with both suspicions and fears about prescription malpractice, as well as a belief that too much profits are being made in the so-called branded drug segment, and therefore affordability must be pushed. And in fact, the guidelines actually refer to that. What's your own view as to the dilemma that your findings present for policymakers should they choose to respond to them?
So Siddharth, we are going to escalate them to all the findings of this survey on Monday. But basically, see, what the findings are suggesting is that we do have a medical ethics problem in our country. At least that's what there's a very strong perception amongst the citizenry that this is something that needs to be reformed. It exists, and the NMC guidelines are a forward-looking step to reform the medical malpractices that exist. So by and large, there is support for the NMC, bill or the law. At the same time, people are skeptical that, how will you enforce a complex law like this, where, health being a state subject, how will the complaint grievance redressal mechanism work? How will you get status of a complaint? Will you take collective action on some of these issues? If there is a medical chain or a brand involved and there is, a violation. So I think all of that has to be figured out from an implementation standpoint. Okay. Now, coming to the prescription bit of what people want to see in the prescription, the doctor's prescription, there's very clearly, the survey indicates that people are not supporting what the government is proposing.
That's it on the show tonight. Thanks so much for watching.